Hey, what's up, everybody? Oh, just checking if everything is ready and prepped. Just give me 1 second. It'll be like 10 minutes, guys. 10-15 minutes. Change this. Bang. Bang, bang, bang. Mic check, mic check, mic check. Hey, can anybody hear me? What's up, everybody? What is up? What is up? What is up? What is up? Let me just see. Just made sure everything is running. Because last time I had a little problem, so I'm just making sure. Yeah. Hey, see, Mr. Dimai is here, man. Blessings to you, brother. Ah, blessings, brother. Yeah, man, let's make it a good one. Let's see if we can learn anything new, bro. But yeah, this will basically. Okay, okay, thank you, brother. I appreciate that. Okay, let's get it started, man. Okay. So let me just show ya. Just gonna take this off. Take all this clutter off of us. Okay. Let's get a nice show here. Okay, I'm just making sure everything is ready and prepped. Okay. Okay, so basically, you guys will see that on Friday, let me just show, we had, what's it, NFP. So NFP, I like to regard NFP is a very, people like to consider it a very gambly, volatile day. I like to consider it as a day where we really run to a place where we haven't ran liquidity for a long while. So it will be a place where you think retail traders will be safe. So that's in my humble opinion. NFP is a really volatile day, so so like they say, don't full blow your account and stuff on especially these days. Even if you guys saw like the run we got, the freaking 1200 point run, which is absolute bonkers, which I'm just gonna show. Let's get it, let's get it. I'm just gonna guys see where we ended on Friday. We still left this low, so I'm expecting probably over the next few days I'll see if price can come down here and fill these inefficiencies. The reason we had this major dump, there was a Judah swing which we live streamed on Kick there. I think it was Wednesday. On Wednesday we had a what they call a Judah swing, because you guys can see what happened. All the way from April we had the massive bull run. So everybody was longing every single day. The main objective was just longs, 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 longs. Even though we had clear price action, doesn't matter. So even with this little, what do they always say? They always say, buy the dip. So what happened? Everybody bought the dip. So everybody that's bought the dip, this Judah swing. So everybody bought the dip. Just take this in consideration. So long-term investors, all the way from May, buying the dip after seeing this massive bull run with the Trump situations and the current tariffs. I think that was in the tariffs and the whole, there was currently as well. So that's it, right? Just be careful, guys. So yeah, the whole idea is long-term investors were holding price here. They bought the dip, price rallied up here, extended, and we gapped up on this rejection block. And then we gapped up, ran for about, just mark this. You guys can see 1800 points. So long-term investors, everybody that bought the dip, were very happy, got filled, or they're probably expecting for us to go even higher. So either way, on the long term side, we can see price rallied up, left this gap. This was really clean. If you can see, like this gap, the way the body even touched right here. But this is a market inefficiency. So I was always looking to see when in time are we going to fill this gap, because this gap is way too good. If you have to see the way this, the high of this candle is, the way these candles are formed, this is way too good. So that's what I consider as a fair value gap. So the low of the fair value gap that was created becomes our sell side. So I'm going to mark this out for you guys. Okay. Oh, Mr. Dank. Blessings, brother. Hi, welcome to the stream, my guy. It's nice, brother. To have some fellow commenters as well, man. Nice to have some company in the times, brother. Yeah, apologies for the late stream today. Got a little bit caught up on the family side, so I just had to spend some time there, and then I had to get to you guys, man. Made my promise, kept my word. So we got the sell side, like I said. This is the daily perspective, so you guys can see bull run, pull back, technically like your little dip, because we filled the 50% of this little buy side, sell side inefficiency, and then we use that as liquidity. Bang, we pushed up, and like we said, now here pushed up. This is the top of the buy side, fold this fair value gap, left sell side here, came back up, had this little run, this little, what they would call, I think they call this a doji candle, is what people like to refer this to. Yeah, I technically don't look at any type of pattern or something. What I just like to look at is liquidity. That's why you will see all these lines are referred to specific liquidity. So this is our, you will see this is a daily, so this is our long-term objective, as well as, like we said, the sell side. So we will see if price can come down, but the body of this is a really important body as well, because this is the connecting body to where we got this initial fair value gap. So this is like the potential, and this is like where everything is happening, and this is the future. So the future is right here. This is where we know, and this is where we want. So we're gonna put this here and then there. So just for this current test, I'm just gonna put this because this was for the PM session, so a different thing, but we can still just mark this out either way. Put this as purple. So this will be the long-term sell side. Okay. So from the daily, we go down to the 4 hour to get a little bit of a cleaner perspective of what we want to see and why we are talking. So what do we see here? We know here's our bull run. This is the pullback. So what happened? got an order block here, filling this fair value gap. Like we said, same here, fair value gap on the daily. This is the daily fair value gap. So this isn't technically our fair value gap, but we see it as one. So this will be our liquidity pools. But here now we're going lower on like to the 4 hour. So what do we want to see? Is we want to see more confirmation to what's happening. So the daily, I'm going to show it short, is the daily we want to use to see where is the range. That's why we marked out right here. I'll show you guys. Let's do this for you guys. Wait. My apologies, guys. Do a clean slate, man. Do a clean slate. Clean chart's the best way. Okay. So we had the previous day. So that's our PDH. Our previous day. Okay, so we have our daily, and we wanted to see where was the nearest liquidity to the daily. So remember Friday, around 5, we were here. So where was the nearest liquidity pool, guys? This fair value gap, this low. Okay. Of course, brother, of course, man. So see you guys, this was the 4 hour liquidity. And right here, this was an old fair value gap, an old low and an old high. So I like to mark these out as well. So you will see here, this was a swing low, and okay, let me just see. Okay. Old low. We got this old high. Like we saw here on the daily. Like we speak about this was our daily, like long-term objective. Because these, where do you guys think, this is the mindset that I honestly think you have to like just consider this, guys. Where do you think, if you were a long-term investor seeing this, I'm just going to use this this little pullback, I would consider. So where do you think, if you were a long-term investor entering in this vicinity, show it like this, where would you place your stop loss if you entered on this candle, or even this candle, or this candle, or this candle? Where would you put your stop loss? If you entered off of here, you would have put it on this little sell side, or you would put it at the swing low, not swept this. So you guys see where we're heading. So that's why I said we'll see where price wants to take us in the current week ahead. What's also you have to consider is the current situations that are happening in the world, like with the war and stuff. These are times that your guys, please be careful whenever you're trading. Like moves like this could become regular days sometimes in the future, possibly, maybe never, you never know. But yeah, that's all I'm just considering, because like I said, this happened for a reason though. So yeah, we'll see what happens. But like I said, if you were a long-term investor on the daily, where would you put your stop? Right there. So you see, we're gonna go 1 day. This is our sell side, the rock bottom. We're gonna consider this as the rock bottom because this is our daily. This is a big higher time frame perspective. So like I said, guys, there, like I said, we have this little gap here. We're gonna look at this on a lower time frame as well, just to get the perspective. So like I said, guys, we have our daily to identify where are we for the day. That's why it's called the daily. The daily is called the daily because where are we currently in the day. So we use the daily to identify, are we really weak in price or is price really strong? Doesn't matter where it is and what's happening, we just want to see. So that's why I said we just use the daily as a form of confirmation to know where we are for the day, so we can like form a short-term bias. So the daily is just there to have like a confirmation for you to consider. So we took the high and the low. We have our previous day high and our previous day low. I freaking put the wrong one, man. Just change this, guys. Otherwise it looks like a ghost. Boo. Okay. The lines we're gonna put at 50. So like I said, we identified now where's price. We saw somewhere down the day we were here. So what we did was go down to the 4 hour. Saw here what long-term investors, where were their stops on the 4 hour, closest to the daily. It's all-time high. The buy side, sell side inefficiency here. We rallied, ran back down for this buy side, sell side inefficiency. Sell side, buy side inefficiency, and this was a buy side, sell side inefficiency. So price was just getting more orders to see where we want to go. So this was on Monday. We ran up the body. You guys see here, this is where I explained, I think I explained this in the previous live stream. You guys see here the body on Tuesday did not close above this, which indicated price isn't as strong as you would think it was after gathering so much liquidity. So what do? We fold it, ran fair value gap, market structure shift, inverted it, and we got our Judah swing all the way up into Friday. So you guys see, because we came all the way down to these lows, which we swept. So like I said, for Friday, we had our previous day high, previous day low. We figured our sell side is here and here, and we can possibly mark this swing low after filling this gap, because if you have to think about it, look how good this looks. Like we had this beautiful run, we came down, we filled this gap. This is too good. Like, just think about it, guys. If you entered here, like I said, imagine if like in a retail perspective, or like a long, not a retail perspective, but a long-term investor's perspective. If you entered there, you would have felt like you were on the moon, riding all the way up. So this will also be a sell side. But like I said, if you were here, you would have felt like you're top of the moon. So this will be the liquidity pool, because that's where like all the little fishies are just eating and eating and eating, if you understand. You guys see here? So this will be the sell side. After running all the way here, this will be that old fair value gap. We got this. Now for buy side, we had this little high from Thursday. Bang, bang. And right here as well, this little imbalance. I'm going to consider this as like a fair value gap. This is more of an imbalance type of run, because we ran through this and these, but we pushed back up. So yeah, then we got the fair value gap, the inversion, and we ran. But how, the question everybody wants probably is on Friday, how did we get that inversion? How did we know the inversion is going to happen? And that's why, like I said, guys, we're marking out the liquidities. So the closest liquidity is here, and want to see if this imbalance can get filled. So here will be another one. But like I said, we want to see what's the closest. So we're gonna put that. I'm gonna go here. Like I said, we're bearish from Wednesday after seeing that beautiful run down. I'm feeling like Elon, brother. Let's check the comments, man. That's kind of funny. Okay, let's get back on track before I lose it, brother. Okay. Like I said here, got this high. So now I want to see where is a little closer perspective. We have our 1 hour now. So we have this gap. A fair value gap. You guys see here? This was too good to be true. So we're gonna mark this. Like I said, this is our old fair value gap. So we want to identify where is the leg of this old. So we know a bigger story of what is this old, how can I say leg, this old defense. Consider the left side of the screen to be like defense, and the right side, which is like where price is running live, consider that to be where price is attacking. Because what are we trying to do? We're trying to attack certain ranges or liquidity pools or whatever. So we're trying to attack certain places. We want to know where the market wants to go. And like you guys can see, like, look, we ran there, we ran here, we ran here. So I'm just showing you guys in perspective here. Like I said, we're just gonna see what this old support is basically telling us. The defense. Like I said, guys, left side of the screen is your defense and the right side of your screen is your attack. So think about that. Sword and a shield. So what is the defense telling us? This is our support. This is where the weakness is. Liquidity is where the weakness is. Why? Because the market is running for the liquidity. But what is the defense doing? It is supporting the ranges of the liquidity. So what the defense does, which is like I said, like I'm saying, guys, these old supports, these old lows and these old highs, even though it got ran, you guys see here, even though it got ran, yeah, that's fine, it doesn't matter, because this is the all-time high, which this is the closest information we have of the past, if you're getting what I'm saying. So like I'm saying, guys, it's not everybody's buying, oh shit, I'm gonna buy. There's a reason. So that's what I consider as well. So this we can see is a kind of a gap. You guys see here the gap between the low of this, there's nothing here, this is a gap, and the first bottom wick we got, this was also a gap. On the buy side, okay, I'm just gonna first clear here. On the sell side, like I said, we have this gap. The sell side liquidities are the weaknesses in the defense, which are places where it's too good to be true. But places like this or this, like you guys can see, it's been filled. So nobody's considering like this. So this is solid price. This is fixed orders that's been filled. But it's the oldest support, if you will. if you get what I mean, gents. So like I said, we have the low of this, and now I want to see where is the swing of this. So it was here. See, the reason I'm putting it with this one is you will see that the momentum, we took orders, strip this, we ran up, got weakness here, we ran back up. This was the strongest run after the price saying we want to go higher. So this is what I'm saying, this will be the high of the old fair value gap. So we will see that this will be the gap between the old pricing and the support that it had. Okay, so this is the low of the 1 hour support here. This is supporting price. This low supported the run to go higher. So what is it doing? It is supporting these. What's it supporting? This low, this weakness. If you guys see here. So what is it doing? This 4 hour sell side is the weakness that we confirmed. The long-term low after this is a massive gap. This price has been filled, it's a gap. And we said this is the low after the first low from after us coming back, trying to fill these inefficiencies here. What is the support for this larger time frame defense? It's this low, so that's why we're marking this as the low. What is the defense for the high of this? It can't be this. Why? Why am I marking this one instead of this one? Why am I marking this candle instead of this one? Because price repriced back into it, which showed us this is a fair value gap. This has been filled. Okay, this has been filled price. But right here, what is this? This is a imbalance that we tapped into, but we failed to come into this fair value gap. So this fair value gap was left untouched. So that's why I'm taking this high, for example, because this is the cleanest buy side support for buyers. This is the buy side support. This is supporting the buyers and the initial run from the from the start of the stream, guys, that we talked about. So we have our 1 hour here. Everything is sorted. We have the weaknesses marked out. We have the defense for the sell side, liquidity or the weakness. We have the defense for the buy side. So let's go down to the 15-minute and let's see where the liquidities are actually laying. Guys, the 15-minute, this is a really important tip, guys. No liquidity or fair value gaps or anything can hide from the 15-minute. The 15-minute is a really good time frame for confirmation for your trades. So I like to use the 15-minute as, like you guys see, we had all our bigger steps and now we can do our baby steps. So we have all our gaps, like we said. It's 4 hour, it's 1 hour buy side support, and now we want to see where is price and what is it doing within of these ranges. So this will be yeah, everybody's gonna tell you guys this shit isn't real, man. Holy shit. Right, we can do this every single day, man. Every single fucking day. Okay, I forgot just to mark here something. I want to check here. I forgot to mark price this imbalance we talked about for the buy side on the 4 hour. Guys, I have two rules, guys. The market goes only for two things, and that is liquidity pools and imbalances. Liquidity pools and imbalances. Those are the only two things. Liquidity pools and imbalances, you can see it as the life and blood of the market. For anybody, if you want to go to the gym, you have to have carbs. You need to have the right proper diet. You have to have the food. If you want to bulk up, what do you need? You need food. You need those little small fry. You need your tuna. So the market, like I said, we need food or fuel in order to hunt. So it's like a lion. We have to get food for us to be strong enough to go hunt again. So that's why we don't sit the whole day at the chart. Every single up candle, close candle, doji candle, order block. You don't trade for any how can I say, any candle, any time. We have a certain time frame which we want to align to. I'm gonna say it like, imagine it's like a lion or a leopard. It's like a leopard laying in the tree the whole day, because he knows every time at around 9 a.m. or 10 a.m. the bucks or the fowl, they come eat their fruits or something under that tree where you're lying in. And every day they come, every single day they're coming and coming and coming. And what the leopard is realizing is every single day at 9 o'clock there's a little like springbok or something from South Africa that's coming exactly under that same bush that you're or like branch you're laying upon. So what does the lion do? He realizes that he just has to wait for that specific time, and then what does he do? He executes. He just jumps down and he grabs it. So that's basically the mentality you have to see while looking at the charts. You have to have that type of hunter's perspective. You need to see where is the small fry for the bigger guy, the prime fucking lion, to get his fuel for the day. And that should be you. You should be the hunter, not the hunted. So like I said, you don't want to be this guy. Man got wrecked, brother. This guy's stop was probably here or at break even. So this guy got absolutely bloated. Just imagine, this guy thought he was hunting. If he got greedy, he thought maybe just another buck. But guess what, buddy? The market doesn't work like that. So like I said, guys, we have the larger time frame sell side. Okay, we have our 4-hour sell side. That's on the larger side. That's the imbalance. Okay, the high of the imbalance. Like I said, if the market wants to go somewhere, where do we want to go? We need a high, swing high or swing low of a fair value gap, which was this. After this we came back up, but the market failed to come back to the 50% of this imbalance. So if I wanted to be bullish on Friday, after seeing this imbalance coming down, I wanted to see at least us be able to get back up here. Like, it's either we push back up, create support, come back, and then we push, create, and then around here, you see, after filling this whole gap, why should we go down? After we have literally liquidity here and here, and as well this high. So if we come all the way back here, why don't we just go for this buy side? But what did price show us? This is Thursday the 4th of June. It showed here, okay, we didn't come back up. Friday at London session open, what happened? We sold off, trying to fill this fair value gap, but we left this low. So what happened? We pushed up here. We did not come back to the 50%. Even on 5 o'clock. So you see, guys, neither showed any bullish confirmation. So like I said, for me to want it to be bullish, like I said, look at this support of the buy side. What's it showing? It's not supporting buy side at all. It just got wrecked. This imbalance just smashed this, and it didn't just smash it. Look, the body, which, consider this, the candles, the sticks, the wicks, is like the story. It does the damage. It's doing the damage. It's like it's taking people out, and then it's like going in a direction. So it like wicks people out and it goes. So the wicks do the damage, but the bodies, they tell us the story. Because we wouldn't know if this body never closed. We wouldn't know what's going to happen if it all was just one candle. How would you know where price was going to go? So this body showed it was an imbalance, and it closed below these two relatively equal lows, which is our previous day low as well. So like I said, guys, here this previous old buy side support, and I'm not I just have to clarify, guys, I'm not a support and resistance trader, boys. Let me just see here. Exit liquidity low. Yes, brother. People get liquidated, and we're the fucking hunters, boy. That's the only way. There's no other way. We want to be the guys that get in, get the food, and we're out skis. We don't want to be that guy that's hanging around, bro. Just hanging around. Like that Beetlejuice meme, bro. So, like I said, it's old support. What did market show? We did not fill the imbalance. And what's the story showing? We got an imbalance, so the market showing us buy side just got violated all the way from Wednesday. So Thursday, inversion fair value gap, imbalance, fair value gap, and we just got this repricing, seeing what we want to do, and right here we got our story. So here we had potential. After seeing, we failed to close to the 50% of this, even of this wick. And the candles are closing still below. Okay, here we got like this little push. This was the fake out. So what do we do now, guys? We go down to the 15-minute to see more detail. So yeah, we had the 15-minute buy side. Where was the sell side for the 15-minute? It was down here. Okay. So you guys see here, seeing here what happened on Thursday. Thursday created this swing low, had this fair value gap, we ran up, got filled, come back down, come back down, filled this. So price was filled here. So what you wanted to do is keep a close eye. Because what do you think retail's thinking? Liquidity. There's 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 liquidity. And right here's liquidity. So you guys see what retail's thinking? Is they're thinking that, oh, okay, we've been selling for like 2 days from Wednesday, it's Friday, so let's buy. It's probably just another dip, because yeah, we're just going down, it's just another small dip. But what is price actually thinking? like we saw, the imbalance. The buy side support got destroyed. Like I said, right side, attack. Left side to screen, defense. So, from the 15-minute perspective, what did we see? We had this previous day low. Okay, mark that. We saw liquidity got rated here, push back up, and this was that London session. I think that's you. I think that's you, Dank. You asked me here, I think I can't remember when, but I think you entered here or something, and then price pushed back up, and you asked if you, like, remember what I said? You thought right here, right? You thought we were gonna fall this. Yeah. Like I said, guys, retail was seeing all these highs, but we only want to consider how can I say, the premium liquidity pools. Not every single, like I said, not every single inversion fair value gap is a inversion fair value gap worth trading. Like I said, not every buck or something that comes under the tree you're gonna be able to catch. But if you wait for the bucks to eat themselves full, then they're slow, and then you catch them. So that's the whole concept. Like I said, we have this 15-minute targets. So we had this, and this. So we go into the 1 minute now, and this is where it gets interesting. So the 1 minute gives you all the detail for the whole story. And what do we see, ladies and gentlemen? What do we see, guys? You see this? Shit's magic, bro. This shit's magic. Was this random, boy? It's buying and selling pressure, bro. Look at the orders coming in. Look at the orders coming in, guys. I'm just making that joke for the, what is it, I think it's the order flow traders, with like the whole cheese, everything aligns and volume profile, and geez, boys, just chill. Imbalances and liquidity pools, ladies and gentlemen. That's it. That is it. That's all you have to do. There's nothing else. There's two things, the life and blood. You need two things, and that's imbalances and liquidity pools, ladies and gentlemen. That's it. So yeah, like I said, this shit's not random, boys. This shit is not random. So, like I said, we had the 15 minute here, 15 minute there, the high and the low. So, like I said, we need fuel in order to lift the weights, or yeah, just live. So we need fuel to lift the weights. So what do? What happened on London? London technically starts at like 2 a.m. So we had all these orders just chopping. Like I said, it was good. Swept this. Got buy side here. Coming down. Just get this closer for you guys. London came down. Made all this buy side. Came down to fill this imbalance. Okay? Because why did the market just stop here? Why didn't it just fill this and then go? Why did the body close there? Because this was an imbalance. Came down, no wick, just shot up. What does that mean? Just like a sudden spike in the market, it means there's an imbalance. Something is wrong. We need to fix the situation and look. Okay. So, weakness, support. It's right there. What happened here? Came down, London sold. Fair value gap. Buy side, sell side inefficiency. Fair value gap, inversion. And you came all the way down. And you got your sell side right here. And you've filled the 50% of this imbalance. Let's see actually. See the story. We just show this. It's better to just prove it, eh? It's better to just prove it. So, what happened? You guys see here? We fold the 50% of this imbalance, as well as we stripped the sell side that was created. And this is the support, but it's really weak. Like I said, guys, there's nothing really happening here, and that's why this was our 15-minute sell side. And this, the 1 minute just proves it again. So this can be our 1 minute, 15-minute sell side as well. You guys see? But the 1 minute proves that this run was too weak. And why? We had our market run back up. Like I said, imbalance, fair value gap. We ran. The low of the fair value gap is the support or the weakness. We filled that on London. So that's why London sold off. Because we just needed to get some fuel, which happened around 1 AM. The fuel was this buy side here. This imbalance of fair value gap right here. This buy side right here. This buy side right here. This buy side right here. So it had almost 4 targets to go for. And it was supported by this old run. So that's why we ran up, got the food. And what happened then? At around 1 AM market started dumping for London. This is New York time. If I'm referring towards time, I'm always referring towards New York Standard Time, guys. So, like I said, we got the fuel. What was the fuel? Imbalance. Liquidity pool. Liquidity pool. Liquidity pool. Imbalance. Fuel was gathered, and London sold where? To where the next fuel was, the more food. This was it eating. After eating this. So what happened? The bucks were laying, they were eating. The leopard was climbing up the tree, just waiting. Okay, watching them eat, watching all these retail traders eat. And what happened? When they were fat and full and failed to eat some more, what happened? Bang! Lion jumped down. Got him. Lion ate his food. When he was done eating, he was full. Because why is the lion full? He ate all the weak. He ate all the weak food, this imbalance and this liquidity, which was the next target for London. Easy, boys. Just give me just let me know if you guys are seeing the same thing or you guys are understanding. So like I said, lion got his food for London after waiting for them to eat themselves fat. Here was a little bucky, here was a little buck. Waited, swept, came down, and this was the most important part. This imbalance got swept, but look at, like I said, guys, the bodies tell us the story, but the candle wicks, the wicks do the damage. So this was a weakness. Okay, so I'm gonna come to that now. But this story was completed. The lion was full, so he went on his way. Okay. So the lion he got his power after that. So basically, after sweeping, let me just check the chat. Hey, blessings, brother. Much love, brother. As long as anybody is learning something new, brother, blessings to them. That's my main priority goal, man. Must say. But I appreciate you being here, brother. Jeez, I'm seeing the stream's been running for an hour. Okay. But like I said, whoever stays, brother, and whoever really pays attention, like I said, only the best and only the most, brother. So let's smash this. So like I said, boys, London was full. Not gonna mark that out, otherwise we're gonna have too much of a chop. So that was just the reason for Mr. Dank why London pushed up. So line was full, and then it got where all these same story, brother, same story, different thing. So got filled, didn't want to go here, imbalance, fair value gap, same story, ran back up into this old buy side support. And what did we sweep? We swept the high that London failed. That's why this imbalance got up, because after the sell side program, remember, this was from Thursday, the PM session. This was the buy side program. Okay. Friday, we had the sell side program for London. London was still in progress. It basically started, okay, around 3 a.m. What happened? You had confirmation to know we left what? This buy side right here. Because we started a sell side program. Why? Like I said, we swept all of these, created a fair value gap. There's nothing here stopping. This has been swept. This is not stopping this. So this is the attack. We're attacking. So we attacked, and they were too weak. But we didn't have enough army, so we couldn't take this. So there wasn't enough orders to get price up here. So what did we do? We got all these which showed price wasn't strong enough. So for London, you had your your fair value gap, your inversion of that fair value gap, and your displacement. So that's where the sell side program happened. After running to this, what was left? What liquidity pool was left after taking this and pushing back up? Was the buy side. So what happened? We came back up to support, tapped into this previous day low, we came back up, push back up, support again. Like I said, guys, imbalance, ringing a bell. Like I said, guys, liquidity, ringing a bell. So everybody that entered here, this will be your first exit here. And what was, like I said, what was the place that the sell side program failed? It was this buy side. And that's why you got this scary imbalance. It wasn't scary. Why wasn't it scary? Because you knew. Lion was waiting. Got the food. Sell side program. Filled. we left the sell side, but that's fine for us, and we came back up. Okay, why? Because we left this buy side, which is our primary liquidity, so that's why we came up here. So what does that mean? Buy side, the buy side program was completed. So what was your next buy side target? This 4 hour. There's 4 hour, brother. Oh, blessings, brother. Shout out to you, man. I mean, like I said, doing this for the community, brother. Okay, so that's why London had this imbalance. Like I said, everybody was probably wondering, what did Trump tweet again? What did Trump tweet again? He didn't tweet shit. It's just part of the market. You guys see the damage and the story. So what was this? This was a order block. An order block. Just want to make sure if this is the right pronunciation for this, or like description. An order block is a change in the direction of price flow, a potential change in the direction of price flow. So an order block is usually a place where you know price wants to reverse. So why did you get this? Why is this an now the question is what you're probably asking, so is this an order block? No, this isn't an order block. This is what you consider as a rejection block. A rejection block is also the same basically as an order block, but it has different criteria towards it, and it kind of acts differently. But that's for another day and another conversation. But off of what we're working now is, like I said, guys, we swept buy side. Buy side program was completed. Our next target for buy side was this 4 hour, but what did we leave behind? Sell side. Okay. So like I said, guys, from the higher, remember from the beginning of the stream, the higher perspective, what did we see? We were bearish. Because of that, all the way from Wednesday, we were bearish all the way up until Friday, and we failed to fill the 50% of that imbalance. And as well, what happened was, even with this London run that you see, that huge spike, that huge run, let's go, what happened right after it? What happened right after we got enough food? That 15-minute buy side. That, like I said, guys, the 15-minute, there's no liquidity that can hide from the 15-minute. That's why that's like your intermediate type of liquidity. But at least you know that it is the right, or like it's a true liquidity pool. So what happened after that spike? We came back down to more than the 50%. Remember, from the 4 hour, we failed to fill the 50%. So which meant we were bearish on the 4 hour of that imbalance. And on this 15-minute, we see that price filled the buy side program, which is the 1 minute and the 15-minute liquidity pools. But the main objective was that London high, that overnight. Let me just show you this overnight high and low. Do you guys see? For the buy side program, this higher time frame perspective is still here, this gap, but you can see this is a really big look. not too big. It's like 1668 points, but still, okay, this would be your target if you were bearish. Oh, sorry, bullish, but we're bearish. Like I said, we failed to fill the imbalance. We filled a 50-minute buy side program on London, and now we waited for New York session, which technically starts at around 6 a.m. all the way up into it's like 10. Let's use that indicator I showed you guys. That's the point. So you guys see we run all the way up into 12, which is lunch hour technically there in USA. So south side, you guys see. So from 8 a.m. But look, this is an important part for you guys. Order flow traders are considering orders flowing coming in, right? But what happened between this gap? The gap between the closing and the opening of London and New York. See? Okay. We ran all the way here. So how did we know we're gonna go lower? How did we know we're gonna go here and we're not gonna go back up here? You guys see here? How did we know after London closed at 7? How did we know the market's gonna go down here and run for this sell side 15-minute overnight? Just gonna take this off. Alright guys, that's the question, right? Like you said, we followed the 15-minute from the overnight high, the overnight low. See? We followed it. And what happened after that? Like I said, we closed New York session, London session closed at 7. And how did we know we're gonna come down here? That's the question, right? Okay. So what we want to use is, like I said, on a lower time frame perspective. We know our higher time frame perspective, guys. We have our daily range, which we say our previous day low, previous day high. We have our higher time frame liquidity pools. We have our like I said, all the way from the daily all the way down to now where we are now, the 1 minute. You can feel free to use any time frame. I'm just using the specific time frames here for to you guys today to just show you guys the just like the basic version of it. So like I said, fold buy side, order block, which means we possibly wanna reverse. Doesn't mean it. Doesn't mean we want to reverse. Just shows there's a possibility. We filled 70, around 70%. We filled the 50% of this gap. Okay, rallied back up because what? You can see the way the market moved down here. It was choppy. Would you really want it to be inside here? Like, that would be really scary, even if you're going down. Because look at this imbalance, this high. It's like the market can just shoot up. So I wouldn't want to be in here after we fill this program. Okay, so that's where you don't want to be in the market anymore. After the lion has ate his prey, the lion has to rest. That's the point. And that's why I say you don't want to get stuck in here, guys. You do not want to be trading in a conditions like after a program, a sell side program has been filled from London, like we mentioned. We filled all of this buy side, sell side inefficiency. What is a buy side, sell side inefficiency? A buy side, sell side inefficiency is where the buy side creates an imbalance. Look at this, guys. Look at this. This price is so good. There's no opportunity given for the buyers here. It's just a rundown. There's nothing. The buyers got here, they got stopped. Sorry, the buyers got in here. After taking this low, they got stopped. Retail traders put their stops here. Price ran for them. Price came lower. They thought, okay, we're just getting a little dump. Price came back up. So the buy side program got filled from the new day opening. Okay, so at midnight we filled this gap. London open, we came back down for this. At 3 a.m. filled the buy side, the primary objective, the first primary liquidity pool, the 15-minute, closest to our higher time frame. What did that mean? We filled it. So our buy side target was filled. We're absolutely jacked, guys. We're absolutely sorted now. So what happened was order block, rejection block, price filled. We ran back up. Chopped here, chopped here, chopped here. And what happened around here? What was this? If you entered on this inversion fair value gap on this rejection block, which is where buy side got rejected, that's why it's a sharp move. A rejection block is where the opposite direction gets rejected, immediately confirming a run on liquidity. But you can see here that the stops here, buy side here, buy side here, buy side here. So this was too good. So what did we want to do? We're gonna mark this. We're gonna take, let's put this in light blue. Like I said, fair value gap. This created a fair value gap, rejected the idea of going higher, confirming this order block is doing its job. Created a fair price after taking this high. We're going to use the high and the low. Here's a little fair value gap. As you can see, at 6 a.m. what happened? It came up in here. But what did we not do? Like I said, guys, what happened? That's the thing here. Look. This is a fair value gap. Okay? Respecting what this order block is saying. An order block, the change in directional price flow. We filled buy side and got an order block. What does that mean? A change. Because why? We still had this 15-minute sell side left. And our higher time frame perspective was also bearish. So we wanted to go for sell side. So what do we want to do? Do we just jump in? Look here. I'm going to show you guys. Do we just jump in on this inversion fair value gap? Yeah, you can. But where's your target? It's going to be this low of this imbalance. But what happened? What happened, guys? Oh, look. It's an inversion fair. This is where the joke comes on social media. Hey, look, guys. It's an inversion fair value gap. Hey, look, guys. It's an inversion fair value gap. Hey, look, guys. It's an inversion fair value gap. Hey, look. Inversion. Hey, look. Inversion. Hey, look. It's an inversion. Hey, look, and it's inversion. Just imagine for yourself, guys. If you put a entry for every inversion here that you saw after seeing this run, okay? You entered here. You entered here. You entered here. You entered there. You entered on this wick after taking this imbalance or this liquidity here, but failed to get a body up on this, or a wick here, damage here. We push down, push down, push down into nothingness, and then we just ran back up. And people are saying, oh no, it's random, it's random, it's random. No, it's not random. Why? Because this is a what? Look, how many points is this? It's a 90 point. It's an 90. It's 900 pips or 90 points imbalance. So what's price going to do? Is price is going to come up here and just start running. This falling, this wick just connects. This body just comes here and this here and here and here and just falls. No. Why not? Because otherwise everybody would be a millionaire if the market just moved. Okay, it's going up. If we tag this buy side, okay, we're going to run down, tag this. It's too easy. And this is where smart money comes in, where they want to see, okay, these guys just got stopped. They're creating all of these buy stops. All these retail traders are placing their buy stops here after taking this, thinking we're going to run down here. Like I said, just hoping for a dream. So what we want to take note is that you will see the high of this fair value gap. Like I said, is our defense. This is the closest defense we have to where price was currently at the New York technically open. The open technically starts at around 6, guys. So anything from, how can I say, when the open starts all the way to the opening bell and up is the New York session. But the official opening starts at around like 8. So around 8 you will have your confirmation, and you will see now. I'll show you guys some secret sauce, boys. Some fucking secret sauce for you gents. This week is gonna be a fucking banger, brother. Sausage. 1 minute sausage. So yeah, 1 minute. I'm gonna say this is our buy side. I want to say it's the liquidity. Yeah, it's gonna be liquidity. This is our liquidity pool. Buy side liquidity pool. Where was the sell side? What do we go for, guys? Free sauce, brother. Free fucking sauce. Yeah, the real question here now is, guys, what do we go for? Like I said, 2 things. Liquidity, imbalance. Where do you see liquidity and where do you see imbalance? What's the closest liquidity pool? You can even go to the 15. easy. Okay guys, look here. Okay, so on the lower time frame, like I said, liquidities and imbalances. There's no imbalance here. We filled the imbalance, all these retail stops, thinking they were going to get the trade of their life. We came back up into this fair value gap. Okay, sell side, these retail traders were aiming for this imbalance, so we're going to put this as the target they were aiming for. These are the guys that you see like on the the fucking TikTok streams, brother. Those type of things. They are trading here and doing this. Yeah, that shit, bruh. So yeah, this is our 1 minute, guys. This is our sell side for short term. Sell side imbalance. What's my spelling? Imbalance. Okay. Do you see what happened around 6? You see here price. What did we do? We filled. Swept the high. What happened here, guys? Look here. This is where you have to pay close attention. Remember this, the fair value gap. This order block was holding price. So what you wanted to do is, where was the buy side? The buy side. This was your buy trap. After London got swept. Look here. Where's the chart now? See this? This is the highest high after we swept London. 15-minute proves it. Your primary buy side. Okay. 15 minutes. Okay. Doesn't it just get cool, guys? Okay, you see? So what? Like I said, get this image, guys. What was retail thinking? Okay, retail traders thought sell of their life. What happened? Smart money stepped in, filled this. Smart money put in their orders. Smart money came up and they exited off of this high. Okay, smart money took partials here. Retail got stopped out. Smart money, they're smarter than the dumb money. Dumb money don't make money. If you see it like that, guys. So remember this, dumb money don't make money. Okay, why didn't they make money? Sell of their life, stopped out. Stopped out or break even. Price consolidated off. But smart money hunted dumb money. That's why you get smart and dumb. It's like the yin and the yang. So you just watch the show happen. You don't want to jump in. You just watch them fight their fight. It's like you're watching the kids, bro. It's like you're watching the kids. Oh, you can fight all you want. Fight. And then, okay. So the yin got filled, or stopped out. And the yang got filled, or stopped out. Okay? So the smart money, after dumb money was violated, basically, after taking this, smart money was hoping to go where? This high. smart money was looking to get to here. And why not? Why here? Because where's this? The sell side's right up top here. And why was everybody so confident? Because it was NFP. the gambler's day. Everybody trades NFP. Everybody's gambling on NFP, guys. So yeah, NFP is the reason why everybody thought we're probably just gonna keep on buying, buy more, buy more. But what happened? We stripped buy side, which is this fair value gap. What did I mention, guys? Remember this. The bodies show you the story, but the wicks do the damage. And what is this telling us? If this is a fair value gap, what are we going to use? Come here. Want to come here. What do you see? Where did the bodies come up to? Not even the 50%. You see? We didn't even come up to the 50%. So we're a little bit inefficient here. But why? Because we had this little buy side, this minor buy side pull right here. This is our fair value gap. The low got swept. Price offered another price, a better price, a discounted price, a premium price. This is what they consider as a premium price, guys. Because what did price do? It offered, after knowing where we want to go for the day, placing the stops here, creating this easy, look at this, if you were here, it's easy money. It's like, ooh, we're just going to fill this and just run. There's nothing stopping us. What is stopping us? Everything. We left the 15-minute and we left this imbalance. The market doesn't just run like a bull, guys. So like I said, we need to fill this from the 4-hour perspective, on the daily perspective, from any higher time frame perspective. We are bearish because New York session is what actually drives the market. New York session is what NASDAQ is primarily driven off. That's why you will see people and gurus and stuff, they trade gold, for example, in Asia, because that's a more commodity type driven or material type driven time frame, or like time zone, for example. But the US stock market opens on 9:30, so that's why we want to wait for the dollar to be in a position where there's money actually coming in, and then we use that information to see where money wants to go. And like Mr. Dank just commented earlier, exit liquidity, baby. You're my exit liquidity. That's why they make the joke and say it like to people like, hey, you're my exit liquidity. It's like, yeah, because I want you to be my retail trader. I want you to be the guy that's trading in, for example, and this is a joke, like I want you to be the guy that's trading in Asia session. I want you to be the guy that's trading, because you're just preparing the food for me. And that's why, like I said, London session, we have our confirmation. I see London session as the session where we have our, how can I say, our path or our confirmation to where we want to go for the day. So London session, like you said, it was like you guys just saw, it was perfect. We got your sell side run and you got your buy side run. The buy side run was stronger, which confirmed what for us? For New York. We left on London, we left the 15-minute sell side that we created. We filled the 15-minute buy side in London, as you can see with that huge spike. And just give me 1 sec. So yeah, let me just show you guys. So we know now buy side was filled. So what was retail traders thinking when New York started? Remember, retail traders and dumb money, I like to consider retail traders as dumb money. What were dumb money thinking? Because smart money were still here, but they were running, but they probably took their stops out as soon as price came back down here. They put their stops below this swing of this high. We filled this, they exited, and they got stopped out for whoever wanted to enter there, or smart money, for example. What happened then? Buy side was filled. So now we know now from the beginning, where we explained from the beginning of the stream as well, we are bearish, and we have filled two buy side programs already. So what happened as well? We left the sell side and the sell side. So what? We have to consider some sell side as well. I mean, that's our objective for the day, or our bias. But from what we're seeing on the lower time frame on London, we swept the buy side, and we created this imbalance. We ran down here, but we left the low of the imbalance. So where's the high of the imbalance? Where's the nearest wick? The first highest wick, the support. It's this high, guys. This buy side liquidity. This is the support. This was supporting buy side. If we closed above this fair value gap, I'm gonna show you guys like this. If we closed, say for example we were here, okay, and we closed, so I'm gonna show you. So for example we closed here, okay, we started here, and we came up strong, like here, and then it pulled back down, and they gave something like this, and then shot like this, further up. That would be a sign of buy side being strong, because that's the support. But what happened to the support or the buy stops? They just got swept. What does that mean? It just got fuel. So the market just got fuel to do what? To run to the next program. And what is that? This imbalance and this sell side. Why? Why do I say this? Why just this and not this? Because we're already pushing up. The reason is, what is the closest, how can I say, remember you're hungry and you need food. Are you gonna catch this little birdie and maybe miss it? Or are you gonna come right down here to that little fat? You see this little fatty, that imbalance? It's fat. That little fat piggy, for example. So are you gonna try aim for the little birdie up here and then maybe miss it? Because look, this gap between this high and this is way too much. So are you gonna try to catch the little birdie and maybe miss, crash and burn, and you're basically left hungry for the day? Or are you gonna come down here and try to catch a little fat piggy that can't run away? Because it's so obvious. It's like right here. Retail tried to run for here. Smart money stepped in, tried to stop them out. They're battling out the battle. But we left the goal. And now they're all left trying to fight over who's right and who's wrong. And where do we step in? How do we know where to enter, for example? Okay. So like you said, guys, imbalances, liquidity sweeps. And now for confirmation, you want to start looking for stuff like market structure shifts, order blocks, whatever you use for confirmation. That can be whatever you see. So yeah, I'll just be explaining it like my way for you guys to see. So you can see we filled. What happened to this buy side or the support? We failed. Look at the bodies. Look at the bodies. This up close candle, this up close candle, this down close candle. This is just price repricing itself. Like I said, this is price coming in, offering a premium side. We were left with the support, which offered a better pricing. This is a premium. This is like the shoes are on sale and it's limited edition, and if you catch the deal now, you got it. So that's basically where your first signs of the light had to start coming in. So you saw, okay, we filled the buy side program. We're leaving this as the little birdie. You see, this is like that. It's like that little birdie sitting on the, how can I say, on the wire, but it can fly away anytime. So I won't be going for this because I know this birdie can fly away anytime. But I know this little fat little piggy here, he's going nowhere. He's sitting right there. So I'm saying from a higher time frame, I wanted to go lower. Little fat piggy down here was left. We caught some fuel in order to catch the fat piggy, because it's not an easy job. And I'm just using these like for examples for you guys to maybe understand it a little bit better. But yes, just so I'm saying, buy side, no bodies. Like I said, this is what you wanted to see buy side. Something like this. We filled better price, and this is, what's this showing you? Is this giving you any information? No. So like I said, the only information here is this little birdie, and maybe it's a lie. Okay, so I was not confident in that because we filled the buy side, box checked. The buy side has ate their food and they're full. So what happened? Sell side was left hungry. So we have to equalize the market. And what was left? There was 2 sell side programs that was left. And now at the moment of looking at the chart from New York session that technically starting, so you can see what happened. We filled this repricing. What happened here? Okay, we filled it, guys. See this low. I would have entered right here on this inversion. It would have been risky, but like I said, with all the confirmation we talked about, why not? if you understand. So you had your price coming up, imbalance, fair value gap. This is a what? A fair value gap. Market structure shift right here. Failed here, failed here. And this is what they refer to as the power of 3. See this? 1, 2, 3. Gets inverted. After we have filled a fair price for the current state we are in. We have filled buy side and we see this, okay? And sorry for the long explanation, guys. I'm just trying to make this really clear so you guys can understand. Okay, so you see here, imbalance. What happened? Price ran up, filled this imbalance. Price ran up, failed to close above, ran back down. This low was inviolated. This low, this high, this low was respected. And this I'm going to show you here. This is really hard to see. I hope. This and this. You see this, guys? You see this? You see this? You see this sauce, man? What do you see here? Fair value gap, because we swept the buy side for 1 minute. This was the little birdie that we knew were a lie. So we knew the line was full, and this was a trap, because buy side was already filled, and we left 2 sell side programs. We left an imbalance created on London, and we left the sell side from the overnight. So what happened? This little birdie was a lie. What happened then? Imbalance. We filled up. We filled this imbalance. Price came. Fair price here. Left all this. Push here. But this high, I would have liked this high. See here, this weakness. The fact that this body didn't close above the 50%. Because look, if this body was so strong, why didn't it just close here and just do this? Because we filled the buy side program in London, and we left the 2 sell sides, the imbalance and the sell side from the overnight. Ringing a bell, guys? So I'll show you right here. You see, so this, I'm just going to take the border away. It looks a bit cleaner. Okay. So you see from this high, this from here to here. This is a fair value gap. And if you, a lot of pattern traders, you can even search like an image or something, what they call a fair value gap. There's a lot, guys, there's a lot more information that goes into this. So yeah, but like I said, this is just a start, so I'll be showing you guys a lot more in the future. But yeah, this is a fair value gap. It ran up, price came down, filled the sell side, buy side inefficiency. This is not a buy side sell side inefficiency. This is a sell side buy side inefficiency. Why? Because look here. Look right here. Isn't that cute? See this? Doesn't that look like the chef's kiss, guys? Why does it look like the chef's kiss? It's too good, man. It's too good. Okay. But at least we started to know we got some confirmation running. Okay. So what did we use? This was going to be our sell side, because this was too good. Could have used this, but this was this low, this swing. It was too good. Okay. And we were pushing up. So this became, can I make this light red so you guys know? This is our short term sell side. Isn't that beautiful, man? You guys see? I'm gonna make it like that. I'm gonna make this. Okay. Hopefully this makes a little bit more. You see what I mean, guys? This is a valid. Why is this a valid inversion fair value gap? Short-term scalpers will be looking for this. This will be like your little scalp. Remember, short-term scalpers are looking for a sweep and liquidity on the short term. They're looking for a quick move, quick in, quick out. That's a scalper. If you're looking to trade intraday, you need to see, okay, you're gonna hold, or where do you want to go? So what happened? What did the scalpers do? Scalpers were seeing, okay, we're gonna sweep this buy side, and what then? This sell side. Like I said, guys, this looks too good. It's a weakness. It's like you're a king and you can see that the army from the other kingdom doesn't have any weapons. It's too good. They think they're good, but they're just chilling. So these are orders or sell stops. Retail sell stops. Retail thinks they're safe here because look, but they're not. It's dumb. And that's what I mean by dumb money. Because what's protecting them? Nothing. Nothing's protecting them. Why? The only thing that's protecting them, and I'll take us back to the 15-minute. Is this old high, this gap, you see here? And where is price? It's not even at the 50% of the imbalance that we ran from Thursday. So you see, this 4-hour imbalance, we didn't fill this. And that's where the 4-hour, the higher time frame comes into play, guys. That's where we knew. That's where the ding-a-ling-a-ling-a-ling-a-ling-a-ling. That's where the bell starts ringing, boys. That's where the fucking bell starts ringing. And that's what happened on Friday. So you'll see here, this was our inversion fair value gap. Because the way this moved up, with this body closing above this high, yet respecting the midpoint of this buy side, sell side inefficiency. So this buy side, sell side inefficiency, fair value gap, has been filled. Because it filled this and it ordered a better price to make sure everybody is satisfied. Dumb money was stopped out, or they got their little piece of the, how can I say, enter and take your trade out. They got that. Smart money was filled, and now we want to start slipping in. We want to be with the banks. We want to be like, we are the market makers. There isn't something as a market maker, because you actually are the market maker. Because you're running with the big dogs. That's what you're doing. That's why you get this. So you want to see the whole picture. And basically what we did was, we're seeing the whole picture. You guys see how this shit's like fucking art, guys. Trading literally is like a form of art, ladies and gentlemen. Fucking bang about that. So yeah, like I said, that's a valid inversion fair value gap. Why? Because we stripped this buy side. It can be like, this is what I mean about these gurus, guys. Somebody will tell you this is a rejection block, and it is. Somebody will tell you it's an order block, and it possibly is. Somebody will tell you that it's a buy side inefficiency, sell side inefficiency, whatever. And it is. And it doesn't matter. That's the whole point, guys. It doesn't matter what strategy you learn. The way the market moves is simple. There's two things: liquidity and imbalances. And there you go, ladies and gentlemen. The best free source you'll ever hear, but you'll hear it every single fucking day from me. So yeah, but if you need to know how to spot it though, and that takes That takes practice, ladies and gentlemen, but I'm here to guide you through the way. So yeah, that's the whole point. So you see here, guys, we filled buy side minor, so scalpers were looking to exit on this sell side. What's a scalper doing? Look, if a scalper would be like on a 15-second or something, say he saw, okay, we failed here, 15-second, or like a 1 second even or something, like crazy shit. Okay, what did he get? He got his 100 points, and he's done, bro. Scalper is like, bang, 100 points, I'm done. Okay, happy birthday, bro. Enjoy. So yeah, you see, minor here, we swept this. We swept this. What happened after this? Remember, guys, imbalances and liquidity. What is this? An imbalance. Because we swept this and just this body didn't close below this. So it's an imbalance. Because why did it take this one and this one to fall? To close down here. There's an imbalance here. There was orders trying to push price up, but it couldn't, but it had to give like a gap in time for it. So what happened was we closed above, but we're still bearish because price was basically filled, but not really. So we came down all the way here. What happened here? Relative equal lows. What did we create, guys? Even more sell side. Okay, and why? Look, this failed to take this low. So scalpers, sorry, I meant to say scalpers will be taking partials here, and then they'll be done after taking this this imbalance, this sell side. And remember, scalpers are looking on lower time frames to see this type of stuff. So because they want to be, like you say, quick in, quick out. You can't be slow. You can't wait 1 minute later. A SpongeBob meme. So yes, man. So yeah. So let's see. Like I said, gents, got this, everything set. Okay. So what happened? What happened? What was the big news that we were expecting? What was the big news after you were seeing all this? Okay. What happened, guys? You see, the sell program started, so it just gave us, okay, we swept scalpers took partials, scalpers came here, okay, another one, filled this imbalance, push back up, and we ran down for this sell side. The body closed below. That's another inversion fair value gap. Why? Because the way this wick closed above this wick as well as this body and this wick. So what? It filled the resting orders there. So that's a fair value gap. It's fair price. It made price fair because of price moving down so volatilely, so rapidly. This wick created a fair price, fair value gap. We ran down here. Why? The body, look at the body. Remember, guys, the body, the story, the wick, the damage. And the body closed, ran down, displacement, started breaking this support. This buy side is not being supported anymore. Remember, guys, this buy side is not being supported anymore. So where are we now? Oh, wow. Okay, got it. So this imbalance. We knew now. This is when the bell has rang, boys. The bell has been like, okay, this was risky. Okay, we were scared, but we knew. This is when the light. It's like you open the curtains. The light has came in. So we knew we were aiming for this. There's no way we're just pushing back up after just taking this sell side, leaving all of these. So what happened is we inversion, displacement, market structure shift, fair value gap. It's a gap, but it's fair because it's been filled with this body closing. We filled, we ran down. And where does New York start? New York starts at 7:11 7 a.m. Okay, so how did you know where to enter and when? Okay, let me just see the comments real quick, boys. Thanks, up. The safari opens up soon, man. Yeah, brother. This shit's literally a jungle, bro. It's a concrete jungle. It's like, remember Bob Marley or something saying something like that. Shit's a concrete jungle. And that's really what it is, man. So yeah, like I said, it's just seeing the puzzle, seeing the art of it, and then you're literally, that's the best explanation I can give, or like the description was. It's like you see it as a jungle, and you're the lion that's hunting the food. Otherwise, you're being hunted. And that's what they mean by your stop loss. My stop loss is being hunted by the market maker. Yeah, you're seeing this right in front of your eyes, guys. Right in front of your eyes. Look how beautiful this run is. So, what happened around 7? We wanted to know where to enter. How did you know? Okay, we came down. Price showed us here, like I said, what happened. We came down to this fair value gap. Okay, this is a fair value gap here. This is not an imbalance because of the wick being higher than this wick, and the way that it filled, and this wick as well, touching this. So this is not an imbalance because it has touched it as fair price here for sell side, fair price for buy side. So this would be your little fair value gap. Fair value gaps don't exist. Yeah, bro, they don't. They don't exist. That's the whole point. So yeah, fair value gap here. Like we say, price seems fair here for us. It's really good. So it's a strong, stable point. It's a stable point. This was risky. Okay? Understand this, guys. This was okay. But maybe we're gonna go for the birdie. But after we came down this, broke down this. No. There's no more birdie. We closed below this sell side, which I'm just gonna mark this for us here. See that? See how much sell side there was, ne? See, sell side here, sell side here, sell side here. But this wasn't important. And see how the body, you guys see this? The story, the body has closed below. Not just this liquidity, but the 50%. The equilibrium of the fair value gap, which means price really is showing weakness. So what did that mean? That is when the bell starts ringing again. Because we know, okay, we've had this run, but we know this imbalance from this spike on London is still there. That's our target, because we're still bearish until this, or either the 15-minute has been filled. It's the important part. So, short term, sell side. We rallied through the midpoint of the fair value gap, as well as these lows, all relatively equal lows, because this low, this imbalance, this low, and this low, and this low is right. It's like they're close to each other, like barcodes. So this is relatively equal lows. After that, what happened? This created a fair value gap. What happened? We pushed up above this. I wanted to see us at least like tap this to get some liquidity, because you can see this was, look here, this is what I mean, this is what I'm saying every single time, guys. I'm gonna say this and repeat this: liquidities and imbalances. Why? Because, okay, but what did the market grab here? What liquidity? There's no liquidity right here. Yeah, okay, you're right, we didn't grab any liquidity here. What did we grab? What did we grab, ladies and gentlemen? Ding-a-ling-a-ling-a-ling-a-ling. This is the bell ringing, boys. Look, yeah. See ya? There's no liquidity sweep, but there sure was a run on the imbalance. And what happened? This is a defensive fair value gap. This is a very aggressive fair value gap, because this is on the closest. But what, like I said, we don't have any buy side or sell side. We have our sell side, but there's no buy side. So after we saw price came down and we know, okay, we're going to be stuck here because this is a fair value gap. Price has to offer us another entry. And what does price do? Comes back and it fails to close above. Why? Because we're showing signs of weakness, guys. We're showing sign of weakness from the beginning of where we started analyzing the chart. We started at the daily, we went all the way back down, and what happened? Market structure shift all the way up here, we are bearish. Order block, buy side, sell side inefficiency. Buy side has been filled due to us filling it 3 times, power of 3, inversion. It's random, guys. There's no algorithm. There's no algorithm. There's no algorithm. It's random. Okay, so back to it. You see fair value gap offering us another fair price. And why? New York started just now. What happened on 7 a.m. on the docket? Fair value gap. Where price manipulated, offered a fair price. That's where you got your confirmation. Inversion fair value gap. So basically you would have put what? What are you risking? 11 points, guys. Yeah. So yeah, you got your close. Look, I like this close actually. I would have just, as soon as it got here, I would have popped it. Like I said, guys, after all of this, you just know where you're going. There was no other way. So what we got here, imbalance, filled, fair value gap, respecting, bearish order flow, because the body closed below the midpoint as well as we swept. It doesn't matter. That's just the foundation. This is what matters, the 50%, the fair value gap, because it showed that price is weak. It's bearish. We inverted it here, and that's why you would have entered here. So it would have looked something like, say this. That was a, see, that's a 1 to 2 or 1 to 3. That will be just like a short scalp for you. Okay, but it's quick. It's like, as you can see, bang, got your confirmation, higher confirmation, current confirmation. You put it in the bag. Okay, imbalance was taken. You took your partials there. Where was your next target, guys? Our 15-minute. That's a 1 to 13 RR. Oh no, how do we know? It's random. Isn't that beauty, guys? Isn't that beautiful? Yeah. Hey, tell me, Mr. Dank, is that random? But I truly hope you guys are enjoying the stream so far. Jeez, I haven't even noticed the time. But I'm having fun, man. I'm having fun. Like I said, guys can do this shit any day. Every single fucking day. It's amazing. So you see, there was the risky, the big ballers, but that was risky. Like I said, it could have been here, could have been, we could have still pushed up. You never knew. If you don't have the right, like if you're still a beginner trader, I have to say focus on one model. If you're good in, if your model fits your criteria, if all your criterias are met, say every London session, then trade that, and trade only that until you see, for example, after a month, you trade that one session for a month, and after a month you will see what the results are, but you have to stick to your rules. And if the strategy isn't working, then you know something is wrong, or you're seeing something wrong. And that's where I feel the problem comes with the people that have all these different strategies. And like I said, guys, it's two things. It's imbalances and liquidity pools. You're targeting liquidity pools, like Mr. Georgie in the gym, jungle in the gym. So yeah, man. Like I said, brother, this shit is an artwork. Like I said, we didn't even see this. I didn't even show you this bottom part yet, guys. We just were talking here. Said gonna take some parcels here, and then what? Second TP was down here. Didn't even look at the chart, and what happened? Bye bye. See you later. And what happened after that? You could have left a runner. Where was the second liquidity, guys? Look here. This is the best part. Where was that 4 hour? Bang. This was TP1. This was your partials. I don't consider partials as a TP1. This is our partials. TP1 was where? Here. TP2 was here. And let's show. How many points was that? How many points was that? That was 340 points. And that's the video that I posted yesterday for you gents. I recorded that video while trading live. Didn't live stream it, but I was trading live. So yeah, man, like I said, guys, it's random. There's no algorithm. Magnificent. Hey, blessings to you, man, brother. And what's up, Mr. Deck? You have any questions or something, brother? How's it, man? If you guys feel free to ask any questions, you can, man. I'll answer some for you. Shall you guys see where did price go? Where was that for? That 4 hour? This was just a liquidity pool. This 4 hours all the way down here. So remember, we wanted to get out around right after New York opening. Why? Because that's when 10 a.m. starts, and there's usually a pullback of some sort or either a continuation. So just remember for future references, guys, at around 10 a.m. there's usually a pullback or a continuation of that move that we are directing in. Buy side is all the way up here. Sell side is all just down here. This old support. The question is, guys, are we gonna go for this high, this little birdie we talked about, right up here, remove all of this, or are we just gonna come for this little, hey, just come take me out, and then we can maybe go back up? But what happened? Body close below. All of these, look at this, guys. We're stuck. And then bang, failed, inefficiency, imbalance, and the market just kept running. Where? Here. We swiped this, used this old low support, came back down to this low, pushed back up to get some liquidity. Like I said, imbalance, liquidity. We swept it. So there was two confirmations of fuel that was used. And what happened after that? The next target was hit, ladies and gentlemen. And what was the next target? Let's go back to the daily. You see how the dots connect, guys? How the story aligns. Look, we started at the beginning of the day and we just worked our way up. Like clockwork, ladies and gentlemen, like clockwork. And this was your run. This was your premium run for the whole day. This was your target. Here's the 15-minute for perspective. And that's 1100 points, ladies and gentlemen. Explained from beginning to the end. Just to show you guys how these fucking, it's amazing, guys. But I hope you guys actually, yeah, man, I hope you learned something new today. And thanks for everybody that's actually stayed, man, and fucking just watched. And yeah, for, like I said, brother, for whoever actually paid attention, gonna be something, bro. Gonna fucking bang this shit. Mr. Bang Bang Bang. Yes, brother. Thank you so much, man. But yeah, just gonna see here. Yeah, thank you so much, guys. And thank you, Mr. Dank, for joining. Until the next one, brother. I'll see you guys tomorrow. Sorry for holding you guys up. Sorry, not sorry. Tomorrow I think there will be a video releasing about liquidity, I think. And then yeah, but like I said, I'll be trying to live stream daily, so maybe we can make this like a every night thing or something. 100% up for it, guys. And thank you, man. Thank you, Mr. Dank, brother. Nothing but love in the world, brother. And yeah, like I said, market opens in about an hour, so yeah, let's fucking smash this thing, bro. Smash, smash, smash. And blessings to everybody, and thank you, guys. Until the next one, peace.